The Dow down 2% and a bit more. The S&P off closer to 2.5%. The Nasdaq more than 2.5% to the offside, which all told pulls the S&P into bear market territory now. All three of them are in that phase. The Dow is off 21.3% from cycle peaks back last around about October, late last year. The S&P off 20.5%. The Nasdaq down closer to 22% there. Ron Ianieri is Chief Options Strategist at Options University. He joins us live out of New York. Ron, good to see you again, and good morning your side. Most of the pressure, of course, on the financials, well, techs as well, but financials mainly more in the headlines. Fannie Mae, Freddie Mac. What would you do in a market like this?
Well, I mean, to be quite honest, if I'm going to be involved in the financials, I'd be short them. There's a lot of problems here, and I think that there was an old saying that one of my partners told me that he learned from an old floor trader, and that was, if the financials aren't involved in the movement's not going to last. And I think there's a lot more downside in the financials, and I would stay away from them unless you're comfortable to play them on the short side. I think there's more to come on the downside here.
Would you stay away from them as a blanket sector, or do you think there are some that might be able to withstand the problems better than others? For example, there were some comments from the former chief executive of Citigroup, Sandy Weill, last night, saying that Jamie Dimon's JP Chase might be better positioned than some of the others to withstand the problems.
No argument there. Right now, I think that no matter what happens, things are going to be heading down. But if you were asking me and saying, hey, Ron, look, we might have some investors that want to start slowly accumulating positions in your three favorite banking stocks. JP Chase is the #1 pick that we have for people that want to start bottom fishing here. I'm not a big fan of bottom fishing, but the fact of the matter is these stocks have been beaten so badly that it might be time to start testing the waters a little bit. I'm not saying to buy your whole position. I'm saying that if you feel that, hey, I've got 1,000 shares of this stock that I could buy, maybe you wait a couple weeks, you buy 200, you wait a little more, you buy 200 more. Slow accumulation of these stocks wouldn't be a bad idea, but there's only 3 or 4 that are going to be worth it, and JP Chase is #1 on our list, and we are acquiring that one.
Ron, we also heard Jamie Dimon warn that some of the commercial, some of the regional lenders in the U.S. may be in the firing line. And in the last hour or so, we've heard from Wachovia announcing a new chief executive, Robert Steele. This is interesting because he's a former Treasury man and also former Goldman Sachs executive. So what do you make of that, and do you think that's going to restore Wall Street's confidence in this company?
I don't think that the confidence is going to be restored until this problem is over. Hopefully, what they're trying to do is take this opportunity to clean out some people that have taken some bad risks, that have rolled the dice a little bit too often, and hopefully, right now it's a time to tighten and shore up the boat before we go back out to sea. But it's going to be difficult going forward. I don't care who you are. If you're going into one of these banks as a CEO or some other, higher-end position, you're going to have trouble before things get better, no matter who you are.
Those are rocky seas, Ron, rocky seas. Ron, we'll get back to you in just a second. Sure.